If you want to know if you're buying too late or if the stock that you have is getting ready to roll over, then this video is for you. Hello everyone, my name is Michael Lamott. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that today is by giving you my personal 4 ways that I will check to see if a stock is a little too extended to be bought, or if a stock that I have might be ready to start to pull back and roll over. So sit tight, and here's 4 tips. Number 1 has to do with moving averages. Which moving averages are being respected? How far is price above a certain moving average? And what's the average range that price has been above this particular moving average that's been respected? So let's take a look at some examples and it'll make the point a whole lot clearer. So the example that we're going to use is Intuitive Surgical. The ticker symbol is ISRG. So this is a weekly chart of Intuitive Surgical, and we entered back here. What date is that? So back in August of 2017. And if you look at this chart, you see that red line, that's the 10-week simple moving average. And it broke out of this pattern right here, and it tested that 10-week line, got support, then started to pull back over here, didn't quite touch it, it started to rally off of it, then it consolidated sideways, was getting support right around that 10-week line, and then it broke out above it, right? So, or broke out off of it. So you see that this is how you could tell that a stock is getting support at a particular moving average. It's just observing what's actually happening on the chart. Sometimes it'll get support at or around a particular moving average. Sometimes it'll completely disrespect moving average. All stocks behave differently. It's really just investigating what particular stock we're looking at and what is that stock doing, what's its behavior. Right, so each stock is going to be its own case. In the case of Intuitive Surgical, it got support at that 10-week line. So let's see approximately how far it would rally above that 10-week line. And so the way that I'm doing that is just by grabbing this little ruler tool over here. I'm using a charting service called TradingView. It's a great service. I like it a lot. It makes annotating and doing this kind of stuff very easy. But so over there, it was about 8% above the 10-week line before it started to pull back. Then over here, it got to be about 11.5%, we'll say. And then over here, this is where we are right now, 8% again. So knowing that when Intuitive Surgical gets to be somewhere in the ballpark of about 8 to around 11% or so, we can anticipate a pullback to the 10-week line. Will it always respect the 10-week line? Obviously not. Look at this over here. It formed another base. And does that necessarily mean that it's a sell signal? Well, it is a sell signal, but that doesn't necessarily mean that it's time to exit all of our shares, and it doesn't necessarily mean that it's time to take every signal too. In a previous video, we spoke about a 3-strike rule, and when you're trading on an intermediate term, especially for something like this that has potential to keep on running, we like to look at a 3-strike rule, and that's going to be moving averages, support levels, and trend lines. But over here, just to wrap up the point on moving averages, it's one way to see is it time to sell, or if you're looking at buying Intuitive Surgical and it comes on your radar up here, then maybe you want to wait until it pulls back and tests a moving average. Or if it bases, then wait for it to get back above the moving average. over here, when we originally bought it for the model portfolio, we saw that it was running up and it pulled back into the moving average and it started to tighten up over there. So that became a great buying opportunity because we knew that if it fell and started to roll over, then that would be the time to exit. We like to have really tight entry points and exit points, and Intuitive Surgical gave that to us right there. So on to tip number 2. Tip number 2, we want to know where the closest level of support is to where price is right now. So, well, what is support and where does it even come from? So when a stock is kind of moving sideways like this, it'll develop different levels of support. So where price is traveling to and then bouncing off of, that's where support is. And sometimes when a stock will break out above resistance, so where the ceiling is, so it breaks out above it, and then will sometimes retest support and bounce off of it. So that former floor now, that former ceiling now becomes a potential support level. So let's take a look at another example and see how some of these support levels are working, and if a stock is getting a little too far away from support, then that's another way to tell that, okay, it's extended, I need to wait in order to buy it, and also to be aware that it's pretty far away from a support level and it could pull back at any time to a support level, be it a moving average or a support level that's a floor, and it might be time to lock in some gains. So back to our example of Intuitive Surgical. So now we're looking at a daily chart of Intuitive Surgical, and we entered right down here, and as you can see, let's zoom in a bit on this. So just looking at the price action, we could see that Intuitive Surgical was bouncing around sideways, like we spoke about, and it was developing this floor right around here. What's that price? That is right at around 305, and you had that little short-term resistance level there, and so that became support, and it was testing it multiple times, and the more times that support is tested, the more valid it becomes, and if it breaks down, then that becomes that much more significant. And then over here, and that's the day that we bought about, there was this advanced entry point right over here, and that's how we were buying. We have that, so that's one place that would quickly turn into a level of support, but we were looking at this here. This is the classic pivot where you have this flat base and Intuitive Surgical broke out of it. And so that ceiling is now becoming the floor, right? You could see it tested there, kind of tested over here, and then it started to work its way higher. And it made this ceiling over here, it tested it right there, started to consolidate, tested it again over here, consolidated a little bit more, and then finally broke out of it. And now that former ceiling is now the new floor. And so continue to run higher, and this is where we are today. And so if you're somebody that decided to buy back here or over there, you have, depending on what your time frame is, you need to be prepared for a pullback lot like this that'll happen into support. So at this point, let's see, broke out, rallied 9%, right? And then it corrected. And how much did it correct? Corrected about 4%. And then after that, it rallied about 15% until it had its next correction, and it corrected about 10-11%. So the purpose of this is so that way, well, we can anticipate these kind of pullbacks and it's not as scary, and we could anticipate where support might come in. So in the prior example, we were looking at the 50-day moving average. Okay, so it broke below the 50-day moving average or the 10-week line. They're basically the same thing. And so yeah, that failed. Then it started to get support at this line over here that's a little bit more faint. That's the 100-day moving average. So when one moving average fails, we want to look at other moving averages too to see where it's going to start to pick up support. And then also look at the former or the various levels of support that have been established. Support was established way back here, right? So if it didn't catch support at that 100-day moving average, the next stop would have been way down here at 350. Now, it all depends on what your time frame is if you're going to be comfortable sitting through this mess. For a short-term swing trading account, there's no way I'm holding through some kind of a consolidation like that. It's just giving back way too much. On an intermediate term account, where I actually have been long this stock since back here and I'm still holding it today, then I'm more comfortable with a pullback like this because it's part of the plan. And I think that that's real important too for whatever strategy or methodology you're going to follow. You need to map out what can happen and what's normal activity, what's abnormal activity, what's going to be your exit strategy, for how are you going to hold through things like this? Are you going to hold through things like this? And just simply try to plan ahead. So that's my 2 cents on support levels. On to tip number 3. Tip number 3 is trend lines. Trend lines are very similar in nature to moving averages. We want to see how well a trend line is respected. We want to see how many touches a trend line or price has on a trend line. The more times that price touches a trend line, the more reliable that trend line is going to be. So let's take a look at an example. The example that we're going to look at is Adobe. Now, Adobe is another stock that we've had in the model portfolio, and this is one that we bought way back in January of 2017, and we bought it and it started to form this upward sloping trend line right over here. And it actually started it way back when it was still in the base, but at this point, when it was back here in the base, you wouldn't draw a trend line because it hasn't had enough time to really establish a trend line yet. Typically, when you're drawing a trend line on a weekly chart, like what we're looking at here on Adobe, you want to have at least I'd say 3 or 4 months worth of price action in order to draw the trend line and have it be a reliable trend line. Otherwise, it just doesn't have enough time to develop. And again, the longer you're able to draw these trend lines, the more reliable they become. So starting back there, you were able to draw this trend line, and at this point Adobe's following up the 10-week line, and it starts to shake out below it, but it catches support at that trend line, and then it tests it again and again. And so now we have these 2 additional layers of potential support for Adobe, right? So it is behaving pretty well around that 10-week line, shook out below it, it rallied, and then we hear a brief shakeout, still kind of getting support on and around that 10-week line and running off of it. But there's also this lower trend line that keeps on going up in it. So far, since January, it caught support back in, what is that? That's like mid-September, early October, rallying off that trend line. So from another technical level, that's something that you would look at for it to get support in the future. Now, how far does it rally above that trend line before it starts to pull back? So there's 13.5%. Over here, about 13-14%, and then it starts to trade sideways a little bit. Over here, starts to slow down. Now it's about 11%. Now all the way up here, it's about 17%. Okay, so we've been used to seeing it above at around 13% or so. Now it's 17, almost 18%. Okay, so now it's not that surprising to see it start to consolidate sideways, and so it's letting both the moving averages catch up as well as these trend lines catch up as well. And then that's how the different layers of support start to catch up to price and support price again, and you get these additional setups where you could add to it. Would you be adding, well, it's way up here. You know, maybe if you're trading on a different time frame, but you should, whenever you're trading on a shorter term time frame, you also want to be cognizant of what the longer term time frames are doing, because they really do affect one another. Case in point right here, right? So let's see, right now, we're about 15% above. So I wouldn't be surprised if Adobe still kind of like trades sideways a little bit from here. If it starts to get much more extended above that trend line, then I would anticipate another pullback. You know, just by its own precedent, what it's doing. And again, like, do you sell because it's extended? Well, that all depends on what your trading plan is and what your idea for the stock is. We bought it way back here, and I've been long this stock since January of last year, and I'm still holding it. And this is one of the first stocks that I've had, actually, where I'm going to be holding a stock for over a year. For me, that's a major accomplishment. I know for many of you out there, you're like, oh, well, what are you talking about? But yeah, for the most part, I'm more of a shorter term swing trader, and I've been following this model portfolio that my partner Adam Sarhan puts out, and it's a lot more intermediate term in nature. And you have great stocks like Adobe that are leaders and form these patterns and break out, and we will manage the position within the model portfolio and raise stops along the way. And we're looking at all these things like trend lines, like moving averages, like not to get too far ahead of myself, but support levels too, right? And to also look at where things are in the later stage bases. So that's our next one. Tip number 4 has to do with the base count. So, well, what does that even mean? So as the stock is moving up, and then it consolidates, and then it moves up again, and then consolidates, those are called bases, and the number of times that it moves sideways and then goes up and then moves sideways again, those are the base counts, right? So if it does it the first time, it's the first stage, the second time, second stage, and so on and so forth. And the way that the base count gets reset is if it breaks out and then undercuts the base, and then you start your base count again. The idea behind that is that you're going to shake out the weaker hands if that base is undercut. So let's take a look and see what Adobe's doing. Okay, so to continue with our Adobe example, right? So let's zoom out, right? So here's a long-term weekly chart of Adobe, and going all the way back to 2013. right? So ran up, there's one base, and the way that the base count works is you want to see it run up about 20% before it becomes a second stage base. The reason why it doesn't count, like if it just runs up a little bit, is because it hasn't had a significant run. A significant run is going to be 20% or greater. So that's not 20%. So there's your first stage, second stage. Over here, that's your third stage. Does not undercut over there. So that's getting to be a fourth stage. And then you finally start to undercut, right? And you could even count this as a base over here. And then you get this shakeout here. So that's the thing that's going to reset the whole count, right? And there's a lot of art to looking at the stage count. You might disagree with the analysis that I had, but just from my own experience, that's what I've seen reset the base count. And why it's important is because when you get into the later stage count, so when something is based out 4, 5, 6 times, then it's on everybody's radar, and then you start to see the price action get a little wonky, like you did back here. And those are all major signs that you're topping out, at least in the near term. So back to over here, so Adobe formed this base over here, a little cup-shaped base, broke out of it, and then the next base that it finally formed was right over here. So there's your second stage base. Did Adobe rally 20% from there? Not quite. Not quite. So you could make the argument that this here is a third stage base. You could say that it's a second stage base if you want to be very strict with, oh, it didn't run up 20%, so this cannot be a third stage base. Well, it's less, I'd say that at that point you're kind of splitting hairs. I think that it's still a pattern that ended up working. I still think that it was early enough in the stage count where you get this pullback. That was a nice consolidation. It was tightening up. You had various levels of support that we spoke about earlier, and it gave a very nice entry. So if you wanted to add in right there, I'd be buying right in the base. Let's bring up the daily chart that we were looking at. Like if you wanted to buy right in there, that would have been the time to do it, as it broke above that descending trend line and back above the 50-day moving average, and you had this layer of support down here, or if you even wanted to tighten it up and use one of those moving averages as a potential support level if it were to just roll over and not work out, that's what I would have done if I were trading this on a shorter term swing trade basis. But back to this and back to base counts, you want to see how far your stock has run without basing again. So just to measure this, Adobe ran 43% without really basing. And we know that historically, when a stock runs 20 to 25%, typically we'll start to see a stock consolidate sideways and base out. So at this point, if we're looking at it that way, so between 20 to 25%, we would expect at least some kind of a pullback. And we actually did get a pullback. We didn't get another base, but we did get a pullback right around there. Right, so you can see that this this stuff works a lot. Like, this isn't just, you know, like, it's both experience, it's rules that other market wizards have come up with from their own observations, and yeah, the stuff matters, and it's a way to figure out if your stock is very extended, if you should be buying, when you should be buying, and if your stock is extended, and could it be potentially rolling over? And if it is getting ready to roll over, what should you do about it? Should you sell a little bit of it? Should you sell all of it? All those kinds of things. It's going to depend on what your plan is for the trade. Is it in your intermediate term account, well, like this is for me? Or is it on a shorter term swing trading account where you would probably be looking to take gains a lot quicker than sitting through these kind of bases? Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally help you. Also, if you like this video, click that little thumbs up button. That'll really help us out a lot. And also make sure that you subscribe to the channel so that way you're going to get all of our updates. Thanks again for watching, and I'll see you again in the next video. Take care, have a great day.